Hi, everybody. February 17th, Scott Riley, the market update desk, NMLS number 157524 with Mortgage One. So, we had a few reports coming out today we want to touch on. We've seen a fantastic move in mortgage rates in the 10-year Treasury over the last 3 or 4 trading days, definitely opening up the room for buyers to get a better rate, more affordability, and also for existing mortgage holders to look to refinance that and save money. So let's look at what's going on today. We had housing numbers, specifically builders. So housing permits rose 4.3% month over month in December, and that gave us an annualized rate of 1.448 million. Now that is down 2.2% year over year. Whenever we see that decline, it's just an indicator that we're not going to have the inventory moving forward and that this tight inventory market is not going to have a magic pill to it in the next 1, 3, 5, 7 years. Housing starts, now that was a positive, that rose 6.2% month over month to an annualized rate of 1.4 million. Now, it is down 7.3% year over year, but having that month over month start to increase as we enter these spring months, that's a positive sign. Housing completions, those rose 2.3% month over month to an annual run rate of 1.526 million. Still down 0.1%. So builders, they're a little tentative going forward. It has to do with um, interest rates and market conditions. And keep in mind, this is a national number where there are pockets nationally that are oversupplied almost right now. But that's very few pockets across the country. Locally, we're in definitely a very tight, contracted market of inventory. Mortgage applications for last week showed purchases, those fell 3%, so just slightly. They are up 8% year over year. Refinances were down 7%. We did have a spike at the beginning of the week last week. It did get better towards the end. Year over year refis are up 132%. So if you're sitting on a high rate, give us a call. We'll save you some money. Durable goods orders. This was a beat on both headline and core. So the headline report showed that orders fell 1.4% month over month. Well, that sounds bad. The market expected a decline of 2%. So it was a beat. Core durable goods. Now that strips out volatile defense spending and aircraft. That rose 0.6%, a healthy amount more than the 0.4 expected. Core shipments. Now this is a number that gets plugged into GDP. Was actually close to triple market expectations at 0.9%. That feeds into GDP. So we've been seeing a healthy GDP growth. We may just see a revision to that to the top side and continued strength as we go forward. In the market, we're seeing Dow is up 290 today. Oil, on fears of potential conflict with Iran, is up 4%. Bitcoin, it's remaining in a little bit of a winter sell-off, still sitting at about 67,000. That's down year over year, actually. One of the things I read today, 1 in 5 new car payments are at or close to or over $1,000 a month. Talking with some of my colleagues and reading a lot, we talk about housing affordability, but some of that is being affected by what people are doing on car payments. When you choose to have a bigger car payment, you have less disposable income to go towards a house. A house appreciates in value and you live in it. A car depreciates in value and is not an investment, it's a depreciation. If you're looking at the two, you're much smarter to put your disposable money in real estate rather than depreciating vehicle costs. Um, we got this week some important stuff at the end of the week. We have the number one jobless claims report on Thursday, pending home sales. Then Friday, we're going to get the delayed but very important personal consumption expenditure, or PCE. This is the Fed's favorite measure of inflation. We've been doing well on this the last two reports. We're expecting it to be at or below market expectations. We're also getting first look of Q4 GDP along with new home sales. So a good amount coming out later in the week. We are seeing fantastic movement in the 10-year treasury, like we talked about at the beginning. Yesterday, we did close at 4.05%. Unfortunately, we could not hold that, and we have risen 2 basis points to 4.07%. So we're in this range of a floor of 4.01% and 4.14%. So we want to get this moving to the downside, the yield, hopefully had some positive news on inflation when that comes out on Friday. Give us a call. We'll help break down programs, opportunities, help you understand what's going on in the market, work with you and your realtor partner to help get your offer accepted. Give us a call, 616 293 2189. It's another sunny, wonderful day. Let's go find a house for you. Have a great day.